don't make $1 million a year, but my wife and I and our son will probably still never, ever go broke. And it's because we found a system that works for us. And today I broke that system down into 6 simple steps so you can just copy us. Coconut water. So let's get started. So 6 simple steps, really easy. Your mind will literally be like, oh, okay, that was it. Yeah, this is it. If you stick to these 6 simple steps, then you'll be well on your way to building wealth and retiring early and all that jazz. And so step number 1 is figuring out your after-tax income. Yeah. And so after-tax income is also called your disposable income. And so your disposable income is the amount of money that actually hits the bank account. And this is after contributing to your 401k, after contributing to any insurances. Now, if you're kind of in a self-employed situation or your income fluctuates every single month, then what we want to do is we want to calculate the minimum or the average income that we have per month or every 2 weeks, plus the buffer that you saved for yourself from last year. If you ever have an income that is unstable, it's super important to save a buffer during the good years so you can cover during the bad years. But otherwise, it's pretty straightforward. For example, in terms of American dollars, I bring in after tax around 5,000 a month. All right, that's like after tax, after all the deductions, after insurance. It's about 5,000 cash in my bank. Second step, assign roles. And so, for example, I really like investing. My wife knows nothing about investing, and so I do all the investing in the family. Savings. So my wife doesn't know anything about investing, and so she thinks it's super risky, and so she will balance that out with savings. And so my wife is in charge of saving money. Not only do we have an emergency fund saved up, we also save a little bit of money from our monthly spending money, which I'll talk about later. My wife also makes the decision on household purchases, and so this is groceries, this is any kind of like household items. And so I've learned to trust my wife and give her 100% free reign on making these purchases. Obviously, if she wants an opinion, if she needs help like looking something up or like comparing brands, I will help out. But I will never go up to my wife and be like, hey, why are we spending this amount of money on these things? I will never question her because I'm not the one making those decisions. Yeah. If I were to question her, or if I should question her, then I should be the one taking a leadership role in making decisions on what to buy for a household, what to buy for groceries, what to eat. I'm not the one doing that. She's taking responsibilities for that, and so I should trust her for that. That's just my philosophy, I guess. In the same way, my wife trusts me 100% with investing, which really gives me more accountability because I'm not just managing my money. I'm a steward of our money. And so I want to be careful. I'm not going to be risky, so on and so forth. And then we also have own spending. And so this is, for example, if I grab delivery, right? If I want to buy like something for myself, very rare do we now buy things for ourselves, just because like I don't really have any expensive hobbies. My wife, really right now, my wife is very focused on taking care of our son, and so she doesn't spend that much money on herself as well. So we have assigned roles. and we don't touch each other's roles and responsibilities. We fully trust each other um, with each other's domains. So after that, we identify non-negotiables. And so we have roles of what kind of purchases each person makes, but then there are also non-negotiables, right? So, and these are things we agree on that no matter what, unless there's like a like emergency, we don't touch what we've already decided. And so one of those things is the emergency fund. And so, for example, right now I have quite a bit of money. It's not even 6 months. It's like an 18-month emergency fund. And some of you might think that is excessive, but I'm a teacher, and hiring seasons for teachers happen once a year. And so I literally might be out of a job for a whole year if for some reason I'm not able to work, because schools only hire teachers once a year. Yeah, it's not year round. So 18 months emergency fund sitting there just in case, right? Monthly savings goals for investments. So this is kind of my non-negotiable that my wife agreed on, and so we agreed on saving $2,000 a month from our 5,000 after tax income. And so this 2,000 a month directly goes towards my investment portfolio, our investment portfolio. Yeah. So these are our non-negotiables, right? This is the retirement plan. And so what does that mean? It means as long as I know this is happening, I am set, right? If I'm able to save 2K a month for the next 30 years and put that towards a portfolio with decent returns, my wife and I will be able to retire just fine. Like, I don't need to worry about it. The only thing that I need to think about is as I age, how I change up asset allocation so we decrease the volatility of the portfolio as we eventually will need to use the money. Yeah, that's the only thing I need to think about. But that's many, many years down the road. I don't need to think about that right now. Right now, I'm just maximizing long-term returns. Okay. So those are our two non-negotiables. Now, obviously, if we had debt, right? Like if we had like credit card debt or like student loans, this would also fall under non-negotiables. But because my wife and I both don't carry any consumer debt, this is not a part of our lives. At least not anymore, right? My wife used to have a car loan. My wife used to have a mortgage before she met me. And so that's it, right? So after you identify non-negotiables, this kind of, for example, now I have 3K left, right? So I have 5,000 after tax income. 2,000 a month is going towards an investment portfolio, and so I have 3,000 left, right? And the reason is because I already have an emergency fund, yeah? So I don't need to save any more money for that. Great, so I have 3K left. Now with that 3,000, we set spending targets or habits. And so there's kind of two categories. There's a fixed category, and then there's a variable category that I like to categorize my spending in. And so bills are fixed. So this would be something like phone bills for me. This would be like car insurance, internet, utilities. So like in general, those things on average cost the same every single month. Yeah. So for these bills, it's very easy to just put it on a credit card. That's something that I know I would do if I was based in America, Canada. I would just put these things on a credit card, set up an automatic transfer, and just kind of forget about it. Yeah. But I'm not in America right now. I'm abroad, and so I still manually pay these pretty much every single month. But not a big deal. And then there's variable, which for me, oftentimes it's just eating out, delivery, in like small purchases. Um, so that's really it. I, I live a pretty simple life. Transportation is also one. Like if I take the bus, right? Like gas for like if we drive, right? So like that, those are kind of more variable expenses. If I was based in America or Canada, I would put these on my debit card, and I would just exclusively use my debit card for these things, or cash for these things. Yeah. Um, so that's kind of it, right? And so we want to set spending targets, right? And so like the fixed expenses, these would be like habits. Variable would more be like targets. Now, a target, I know it sounds like, oh yeah, you have to spend this amount every single month. That's not the case. I like to just calculate like how much ordinarily would I spend each month, right? So for example, because I'm living in a quite a cheap part of the world, um, a meal that I eat for dinner, if I order delivery for myself, could cost like around $6. Yeah. And so theoretically, if I did that 5 times a week, that would go to times 5. That would be $30, right? If I did that every single week, that would be times 4 weeks. And so that would be $120, right? And so I would be spending $120 on delivery, for example, or dinner, yeah, which is pretty accurate. Yeah, this is about how much I spend because I'm based overseas in China right now, and it's not an expensive place for me, at least, on my income. And so that's kind of a variable expense. So spending target, habits, that's set. And my wife and we sat down together and we were like, all right, how much would like a lifestyle cost? And so we sat down and we decided, hey, like $2,000. Yeah, $2,000 is kind of how much our lifestyle costs every single month. Yeah, so we allocate 2K. And so one thing you notice is that we have 1,000 left, right? And the reason is because I like to introduce slack into the system. So the system isn't constrained, because if I feel like I'm always close to the limit every single month, it stresses me out, honestly. And so I introduce slack into the system. And if you're somebody that budgets, like you're using a zero-based budget, for example, you would include this slack as a part of the zero-based budget. It would just be additional savings. And so how do I introduce slack? Well, I underreport income. I know that sounds like illegal, right? Like we're underreporting income. But the idea is that if I was filling in a zero-based budget, I would just round down to the nearest 1,000 or the nearest 100 or something like that. Like, for example, there's no way I get exactly 5,000 in the bank every single month, right? Like it's just like around there. But I report 5,000, right? It might be 5,100 that I get. It might be 5,125.2, right? Like that doesn't matter, right? I report 5,000. I make my budget based on 5,000. So I'm automatically saving like $100 or however much I underreport every single month, right? So that's that. Investment goals. So these are non-negotiables. So these are equal, right? I contribute the exact amount and I make sure that that happens every single month. So that is unchanged. And then spending targets, I like to overshoot, right? So for example, if I've budgeted $120, I like to say 150. So that's slack in the budget. I can go over. And that just makes me feel a lot better to know that I'm able to do that. Yeah. Um, that doesn't mean I'm spending 150. It just means I can spend up to 150. And so if I wanted to have a nicer meal, like I wanted to order sushi, right, for delivery one day, and it's more expensive, I can do that. I'm not saying I'm gonna do that. I just can. And just having the option really gets rid of a lot of stress in my life. And so I also use Slack to appreciate my wife, and she does the same thing for me. And so that's actually step number 6. I don't think a lot of people talk about this, but if you're able to stick to a budget, if you're able to like stick to savings goals, if you're able to like fully trust each other with money financially, like there's no reason why you wouldn't want to celebrate that on a regular basis. You know what I mean? And so we use Slack to appreciate each other. So like getting a gift for each other, having a nice night out, right? Going to the movies, right? So like that's stuff that having this Slack will provide us. And so you'll notice something very interesting, right? It's that I have 5,000. I have 5,000 in after tax income. I'm investing 2,000 a month, and I'm spending 2,000 a month. And so technically, I have another 1,000 left, right? And so you might be wondering, hey, what do you do with that 1,000? And so like here's a bonus, right? And so the other question is like, what about big purchases, right? Because obviously, your lifestyle spending, like your spending targets, this does not include if you want to buy a new car or like a new TV or whatever, right? And so with that $1,000 extra, we go back and we adjust the non-negotiables. So for example, right now, we are planning a trip to Canada in July, right? And so, plane tickets cost a few $1,000s. The trip itself will cost some money. And so that's where the extra 1,000 comes in, right? $1,000 a month, because this is a big purchase. This is a big spending, and there is no way that this spending is gonna come from our emergency fund, because a vacation is not an emergency. Yeah. So that's kind of how my wife and I manage our finances. And the beautiful thing about this is we're able to trust each other with money. Yeah. And we're managing our money essentially for each other, right? Because like I invest not for me but for us. She makes purchases not for me, not for her, but for us, right? And the family, right? And so we're stewards. Yeah. So we're not selfish. We have common financial goals. So these are our common goals. We have a common understanding on the kind of lifestyle we want to live. We have autonomy and agency if we want to treat each other, right? Because we have Slack, right? If we want to appreciate each other, we can do that. Also, our spending targets include our own spending, right? It includes the money that we want to spend on our own, right? That's also a part of our targets, right? And so we can treat ourselves if we want to, and so we don't have to worry about that. And then lastly, because we've introduced Slack into the system, we can start thinking about, hey, what kind of big purchases do we want to put our money towards, right? The alternative, the not as good alternative, being, hey, like if I want to save for a vacation, then something has to go, right? Like I'm either investing less, which I don't want to do, or I'm spending less and sacrificing my lifestyle because I want this vacation, rather than always just having some money that is going towards some kind of big purchase. Yeah. And so that has worked for us for the last few years, and it's helped us build wealth. And so if building wealth is something you're interested in, then definitely subscribe to the channel if you want to level up your finances. I'm also on Instagram, where I'm documenting this journey of just changing people's financial lives. Just started that. And so follow me, subscribe, leave a comment. What is your system? I'm happy to hear what you're up to and learn from you.